When it comes to investing, one of the questions I always get is why am I invested in the ETFs and why is that my preferred method? Today's video, we're going to try to break that down, and I compiled a couple different articles with the help of ChatGPT to kind of understand the exact reason why I do use the ETFs. Now, this is really dependent on your goals, your risk tolerance that you're willing to do in the market, but the ETFs do offer a wide, diverse portfolio with a single ETF, which is one of the big reasons, guys. It puts stocks in there, it can put bonds in there, very similar to mutual funds. However, I know Dave Ramsey recommends mutual funds and a couple different good mutual funds. However, a majority of people have made the switch to ETF for a couple of reasons. Number one being the tax efficiency. With ETFs, they are a lot more tax efficient. They also do have a much lower expense ratio, which is the reason why personally I do invest in only ETFs. If you caught some of my investing videos, I do have a portfolio of 4 ETFs, and soon the Bitcoin ETF will be joining those. Now, also, that makes a lot of investors drive and make the switch to those ETFs versus the mutual funds, is they are a lot cheaper. Now, when you think of mutual funds in the expense ratio, it doesn't seem like a lot, but when you start going out 10, 20, 30 years, just like the 1% that you can pay a financial advisor, the fees can get astronomical, especially when you start getting into larger numbers with the percentages that they are doing. Now, ETFs over the last 20 years have become an incredible journey for the ETFs. Even investors sold more than 900 billion of mutual funds, putting roughly 600 billion into ETFs, which is the net largest difference of any investment portfolio year to date. And we continue to see that exact shift because, again, it's very similar in the portfolio or the makeup of mutual funds. The ETFs are not managed funds where mutual funds are, and those mutual funds are what you're essentially paying for someone to manage those mutual funds. Now, a lot of people, just like the VOO or the Vanguard S&P 500, that has really been recommended from Warren Buffett to pretty much anybody that should invest in the market, is you're getting the 500 largest companies in the United States or America, which means that you have exposure to all the different sectors, all the different companies, and you are diversified just by default going in that ETF. Even if you're going to a mutual fund that has a very similar compensation of what we see from that VOO, you're going to pay a much higher fee. Now, of course, tax efficiency is one of the very big things, guys. Now, again, you have to talk to your tax advisor, figure out exactly what your situation is, because when it comes to investing, when it comes to the goals that you have, short-term, long-term, even when it comes to taxation, you have to make sure, guys, that you really do know this. Now, if you have an investing in a brokerage account, like I recommend through M1 Finance, I got a link down right below, guys. If you want to do any of the IRAs, the Roth IRAs, the Roth, everything is in there, guys, for you to get. And also, if you like the video, go ahead and subscribe, guys. Let's continue into it. So compared to the pre-tax or the 401k plans or the IRA plans, which you can defer until you actually withdraw the funds, I do not like the deferment when it comes to withdrawing the funds, which means I like the taxable brokerage accounts. I like the investment accounts that I can actually pay the taxes up front. So you're not theoretically just kicking that investment can down the road till you have a much bigger stockpile of money. Then you have to start paying interest or you have to start paying taxes on that. Now, one of the most attractive features when it comes to those ETFs is that most of them do not distribute capital gains at the end of the year. Now, again, if you are a very tax conscious person, when sitting down with your tax preparer, figuring out exactly what is going to be the best methodology for you and how you can save money on taxes, guys. Most of you know when you get paid, you get taxed. When you buy something, you get taxed. When you got land, you get taxed. There are, and I believe it says your dollar can be taxed 5 to 7 times by the time you get the dollar, which is crazy. So any way that you can cut the taxes, essentially lowering your tax bill and keeping more money for you, is the big reason why you should do this, guys. Now, by comparison, most mutual funds have a year-end capital gains distribution. Depending if there is a large outflow, which requires managers to sell off some of the holdings, which in turn could be a taxable event for you come the end of the year. Now, again, this is really the ETFs are providing more of control over the tax impact when it comes to investments and when it comes to the taxable accounts. So how, in addition, can it diversify your portfolio, guys? It is really the balance of the risk and the reward, looking at allocation strategies, just like I have in my portfolio itself. ETFs are either a core portfolio or kind of a satellite portfolio, depending what you can invest in. Now, for me personally, looking at my 401k, I have large caps, I have mid caps, I have small caps. I also do have target date funds. Most of those are in a couple different buckets, essentially. That doesn't give me the same exposure that I have with my personal taxable brokerage account, my investment portfolio that you guys do see here. So they are almost completely separate. ETFs with a very broad base, like I said, with the S&P 500, with that VOO, can be part of the core, or it can even be your entire portfolio, guys. As you've seen from my investment in the VOO, we are up about 40% in the last 2 years, which again, you have the entire market. You have the 500 largest companies. You are covering all of the sectors with one single ETF that has a very, very cheap, I believe it is still the 0.03%, which is crazy, guys. And also a lot of the ETFs can kind of expose you to things that you want. So they can actually take a bunch of stocks, a bunch of different companies, wrap them all together in an ETF, and whatever you're kind of interested in, you can go ahead and invest in that ETF. We have seen the same with video game ETFs suited for people's interests. We've also seen it as of recently for like AI ETFs that are literally taking a bunch of companies that are in the same sector or do have a little bit more of an overlapping sector of what you do want to invest in. Now, we also see some of these in M1 Finance that are kind of the environmental conscious, where it takes a bunch of green companies, buckets all them together. If you're looking at different stocks, bonds, there are so many different ways to really cut the ETFs up to make it really work. And there is a role that you want to fill with specific things. Now, ETFs, of course, can be a lot more intentional, guys. Whether to invest in there, you can have a greater focus on matching your personal interests and your personal needs. Now, this is the reason why, again, I really focus on ETFs. I do not buy individual stocks, and I will not carry any individual stocks for the simple fact, guys, that the ETF does provide the diversification that I'm looking for, but it also does allow me to focus in, if I wanted to, in certain sectors, certain stock portfolios, niche focuses, food sustainability, climate change, whatever you want to look for. There are ETFs out there that are focused, again, specifically on the things that you're looking for. So do your research, check your ETFs, guys. And there, again, are a lot of really, really interesting ETFs at a much cheaper price than you're going to pay if you're holding individual mutual funds, which, again, I know a lot of people do recommend the mutual funds. Me personally, I don't see the benefit when a lot of mutual funds are very comparable or almost identical to the ETFs, except those ETFs have a much, much lower expense ratio. And again, when you start getting into bigger dollar amounts, when you start doing dollar cost averaging and things of that nature, you're going to see a lot more benefit out of those ETFs. Now, always, guys, seek out professional advice if you're not doing your own research. If you want someone just to manage it, pay your 1%. I'm not saying that financial advisors are bad or there's anything wrong with it or there's anything wrong with actually paying the fee. If you're not experienced, if you don't have exposure, if you don't want to do the time and the effort, if you don't want to do the research, building your own portfolio, figuring out your ETF strategies, definitely get a financial advisor, guys, that you can run everything off of. When it comes to retirement planning, you definitely need one so you know exactly how everything's going to go, how much money you're going to need in retirement. And again, if you don't want to do it yourself, you can definitely reach out to professionals. They're willing there to help you. So guys, that's going to do it for today's video. Let me know in the comments what you guys think. And as always, thank you guys for watching.